On an overall basis, the finance minister has developed a very mature budget and has stayed on path of fiscal consolidation. A fiscal deficit target of 3% is really commendable, given the fact that the finance minister had to increase his spending to give a spur to the economy because of demonetization effect in the last quarter. On the ease of doing business in India, the finance minister has made a big bold step of abolishing FIPB. We hope that the new system that comes in place of FIPB would be less bureaucratic. The finance minister has announced a big reduction in corporate tax rates for small and medium-sized enterprises for companies having turnover of less than 50 crores for the financial year 15-16. This gives an opportunity for these companies to still grow further in subsequent years and yet retain the 25% tax rate benefit. The disappointment is that this tax benefit is not extended to other taxpayers and other classes of taxpayers such as firms and LLPs. Even large corporates would be feeling a little bit disappointed given that they were hoping for a corporate tax rate based on an earlier promise by the finance minister. The MAT tax rate has also remained the same, and now the difference between the MAT rate and the normal corporate tax rate is very narrow, and that will lead to a situation where eventually the MAT taxes under MAT regime would be very high. The overall taxpayer community will also be disappointed given the fact that POEM has not been deferred by a year, which was a main demand for the taxpayer community, as well as the income competition and disclosure standards are not being scrapped. On the indirect tax front, there are hardly any changes, which is a positive sign and which signals government's intention to bring in and move to GST as soon as possible.